What a beautiful day outside it is right now. I feel like I haven't sat down and really talked to you guys and really gone over the charts and give you guys a real full lesson, but that's what we're gonna do in this video right here. We're chilling. It is currently a Thursday right now, and yeah, we're chilling at the apartment right now. It's about 6 p.m. and I'm gonna head into the apartment. I do have a little mini update, right? I just did something pretty dope that I've been needing to do. I just got, hold up. All right, I got it, but I gotta be careful showing you guys some shit. But I got some stools. Whatever. You guys get the point. Damn, hold up, let me turn on some lights in here. Okay, so this is the kitchen. You guys probably haven't seen this in a while since we actually moved in. All right, but this is the kitchen. It's been cool. Nothing has really been done to the kitchen. It's really the living room that's been getting done. You know, since the original video, so the moving in video, I got the rug, I got the coffee table, I got the couch. I got my TV finally off the floor, as you guys can see. Now it's on a nice, sleek little TV stand. Shout out IKEA, right? But we finally got something that's pretty necessary for, you know, people who want to come over and for myself, I guess, right? And that's right here. We're gonna get some two bar stools right here finally. And I went with the bar stools. I'm furnishing very slowly, but I went with the bar stools because I can also do work on here, which would be really nice here in the living room to eat for when people come over. And I can grab the stool, right? And I'm not gonna show you my bedroom, but I can grab the stool and lower it and work at the desk. So you know, I don't have to get a bunch of stuff at once, like you know, bar stools and desk chair and, you know, everything else, right? So I got something that's kind of universal, but the, you know, the stools for the kitchen table is probably extremely necessary. But that's a little apartment update. We've been killing it on the charts, and that's something I really want to go over. I want to go over you guys the markets, how the state of the markets, and run through you guys a very important ICT lesson. If you guys have any questions, you guys know where to reach me. We are here for mentorship purposes, for educational purposes, and to get you guys funded. I'll see you guys in the video. Okay, so welcome to a brand new video. Thank you guys for watching. It's been a while since we actually sat down and went over the markets, right? What am I going to go over right here? And if you guys see my most recently, you know, my recent videos that have dropped, which I really hope you guys have, you guys are going to see that I've had two setups that I've really been playing in my playbook, right? And that is, you know, my setup based on liquidity, right? The silver bullet, turtle soup, based on liquidity, right? Is understanding where the market's at, accumulation, the power of three. And using the premium and discount to its highest extent, right? Using and maximizing premium and discount, right? And that's the setup I'm gonna really be focusing on, because the liquidity setup, the other setup that I'd like to use, you know, I dropped multiple videos on there. And if you guys haven't watched it, that's on you. It's all on my YouTube channel. Liquidity, turtle soup, power of three. I've dropped multiple videos on this, so I'm not going to do it again, at least for now, right? But we are going to talk about, which I haven't really fully diverged in, is going to be the, you know, using how to use premium and discount to its fullest, right? Is grabbing that tool and squeezing every drop of it to really maximize not only your entries, but your setup, right? And you can use this obviously from both sides. If you're looking to buy the market, if you're looking to short the market, someone is playing music outside. Let me shut my door. And it's shitty music too, right? What am I looking for, right? These were extremely easy to even find. I didn't have to go and make a whole setup for this video, right? And do a whole video prep, right? I'm going to be going over two examples, maybe a third, of how to use this, you know, premium and discount, right? So first of all, you have to understand the bias and the direction, right? Now, what do I mean by that? You have to understand the direction, right? What's the order flow, right? Is price bullish? Is price bearish, right? Has price broken structure? Are you looking to go short? You're looking to go long? That's the first thing before anything, and that's something I'm not going to teach you here because that's not the point of the video. You know, you have to understand bias, right? Where is the market going? So we're going to take an extremely quick, you know, idea right here, okay? Now, price is what here? For me, it's clearly bullish, right? And it was clearly bullish the moment that we broke above this high right here, right? Because this is the low that created down. This is essentially on the highest time frame in order block, change in the state on the daily time frame. Price closes above, price comes down, retests, and then price continues above. So for me, price is long, right? Price is long, and not only that, it's just clear market structure that price is creating higher highs and higher lows right now. Currently just made a new high, right? Essentially probably looking to go up and reach these highs all the way up here. And then possibly these highs over here first, right? Now, you're going to be using the Fibonacci tool here, and I've used this before a lot, right? The Fibonacci tool is always going to be drawn in a long scenario from a low to a high, and a short scenario from a high to a low, right? So what that looks like in this scenario is right here, right? You want to grab the bottom of the low, right? If there was a wick over here, you're going to grab that, but you know, a series of up close, down close, or up close candles all the way up to the highest high that it made, right? That's how we're going to actually place our Fibonacci. And if it was the other way around, what we're going to do here is, you know, the opposite, right? I said from a high to a low for longs, but for short, it's going to be low to a high, right? A low or a high to a low, just like that, right? So if this was market structure here, the highest point, the lowest point, you're going to want price, right, to balance out the equilibrium. Now, why is this so important? Why is this one of my favorite setups? It's because the Fibonacci is more than just how I used to use it before in the past, right? This marks price being in a premium or a discount, right? And a discount. You think about it. When you want to buy price, you want to buy at a lower price and sell it. Buy your contract, sell it at a higher price when it goes long. That's essentially what we're doing here, right? Is, you know, you're not going to buy up here. You're buying price at you're buying ES in this case at a very high price at 6,032, right? You want price to come down into a discount, use confluences, right? Buy your contracts here, enter in a contract, enter in two contracts, and then when price goes long, you sell your contracts up here for a profit. That's essentially what you're doing in trading, and people don't understand that fundamental of trading, which is key. This is key. This video is a gem, right? So now what am I waiting for? I'm waiting for two things. First, like always, I want to find some kind of confluence, right? And in this case, what it's going to be is going to be fair value gaps within my in my level, right? When is my level activated? When price reaches this equilibrium, when price reaches this 0.50, with price balancing out this range, right? That's where I want to look my PD arrays for in, right? Not up here. So yes, things my students struggle with is which fair value gap do I use? Well, if there's a fair value gap up here, listen, I'm not saying price is not going to go long from there or bounce off from there, but you have a higher, much higher probability of letting price come all the way down here and a better risk to reward, right? So first things first is you're going to want price to come down and balance out that equilibrium all the way down here, right? So let's just wait until a daily candle, boom, gives us a rejection, right? Now, again, what do you do after price balances out your equilibrium? You want confluence. You have to have something in that equilibrium. In this case, I had a new day opening gap right here, right? And if you really think about it, you have a fair value gap right here, right? Price is rejecting a fair value gap and a new day opening gap all the way down here in my discount, right? That's what we're looking for. We're looking for our PD arrays in our discount, right? Or vice versa. That's what we want to be looking for. In this case, we got it immediately. Look, boom. Price comes down. It wicks our PD array in our discount. So everything is good right here. To put it simply, right, what we're going to do, actually, we're going to have to hire this because that's the high. But to put it simply, what we're going to do is set our trade at a 2-to-1, right? Let's enter off this candle and see what happens. And price takes our profit immediately. It is a beautiful, beautiful fucking trade. Just like that. Our entry model is a little bit more intricate and knows what we actually do within these candles in here, right, to get the best entry and a more precise entry. But we're not here for that. We're here on how to use this candle, right? And this is simple. This is such a key tool. I'm literally showing you guys this on YouTube right now, and you guys still aren't subbing, turning your post notifications on, you're like, commenting, any of that shit. But it's cool. I'm going to go over this one more time. Okay, beautiful trade that yielded you a 2-to-1. Could have had a tighter stop. Literally just beautiful, right? Now, let's come down to over here, right? So what price is doing here, okay? What price is doing here is price is doing what? Price is in a downtrend, right? Price is breaking. Price is pushing up, pushing down, pushing up. This is a series of close candles. What happens here, right? Price breaks under, closes, retests that order block level, and continues to drop here now, right? Beautiful trade. I wouldn't look to trade this because of, so many, rejection points here, right? What I'm looking for really, what I'm doing here is just looking at the order flow. Order flow is bearish, right? But what I'm looking for here, right, is looking for a low to be made. I'm looking for a low to be made, and it was made, right? How do I know that? Again, it's because look at this series of up close candles, right? Price breaks. We're probably going to continue that trend now, right? So what are you going to do, right? Well, you want to draw your fib from high to a low, In this case, we actually got a second candle, so we're going to draw our Fibonacci a little bit lower, right? Now, what do we want in here? So we want price to tap into our equilibrium, our 0.50, and PD array within that level. We have right here a PD array being the fair value gap. So now what I'm going to want is one more candle to come up and reject. I'm saying, okay, right? So ideally what my position is going to be something like this. You see how beautiful that rejection is, right? Just literally fucking beautiful. So what are we going to want to wait for, right? Just to give you guys a more in-depth at our entry model is a change in the state in our trade here, right? We're going to want to change in the state. So, you know, price is pushing up. We're going to want to change in the state pretty soon. Let's see what happens here. And this is, yes, I'm actually going to dive into my entry model. Prices continues to break above, which is pretty interesting. Okay, price breaks above. And as you see here, we didn't get the best entry here. We had no entry actually based on my model, on my entry model, right? But that's completely okay, because if we just go back to the daily time frame, look what happens. Look how price rejects that daily fair value gap and that 0.50, right? We just had no real entry. I mean, technically we really did, right? It's right here, right? Price comes up, price takes out this high, going back to liquidity, and price drops, but it wasn't clean. But if you look at the daily time frame, look at how you guys can use this premium and discount to a T, right? Generally so beautiful. Let's just look at one more, you know, example, right? From low to high, okay? Low to high. Look at the 0.50 being respected here, guys. 1, 2, 3, 4 candles before popping off all the way up to the upside. You like, this is not a joke right here. It's really not. It's really not. Even right here, you know, you can see it right here. You can see it right here, 0.50. You just have to look for that PD array. PD array is right here, right? H4 time frame. Boom. Yo, come on, guys. This is like clockwork. In a short position right here. Boom. Sorry. In a short position right here, right? Why? Because price breaks this order block. Okay, we're gonna go from low to a high, right? In this case, we do have our PD array also. Now notice how the PD array is more so in our lower half of the equilibrium. So price is gonna have to give us a wick into that, you know, a full wick into this PD array equilibrium point. Price is in. I'm not enough. I want that 0.50 to get tapped. Boom. Answer short. Just like that. Guys, this is that simple. I'm so serious. There's obviously more to it. The entry model, the timing, time and price, using liquidity within these levels, building confluences. But that's all we're going to go over. I'm really excited about showing you guys this type of trading, right? There's obviously more to this. Confluences is what you really want to get into. Pairing this up with more PD arrays, order blocks, premium and discount, and all of these things, right? And fair value gaps, which have been a game changer, and order blocks. So maybe I'll make a video on that. If you guys want to see a video on any ICT concepts, put it in the comments below. We've been killing it in the markets. In terms of the state of trading right now, price has been a little bit choppy, as you can see right here, but there's always an opportunity. Don't let social media fool you. Don't say, hey, stay off the markets. Just be careful in the markets, all right? So yeah, I hope you guys enjoyed. I'll see you guys in the next video. Deuces.